we have an amazing quarter from TAV airports in our hands. I am going to start with the overall thesis about TAV, and then we will go to the recent results and the long-term view of the company, followed by what I am planning to do with my position and what to look for in the future. So, TAV Airports is an airport operator, but they also have service companies that are growing rapidly. They have 15 airports in 8 countries that they themselves operate, but their service companies operate in 108 airports worldwide. The stock was originally a clone from Mohnish Pabrai in 2022, which is when I started to cover the company, and so far it has been an 83% total return in dollar terms and a CAGR of 22.4%. Since the date I released my first video on the company. Also, one quick note before we get into further details. Despite being a Turkish company, TAV has international operations, and even their local operations in Turkey are being done mostly in euros. And euro is their effective currency, so the tables and charts that you will see in this video will be in euros. The reason I am saying this is to make sure you don't think the growth came from the Lira's inflation. TAV uses euros, and their growth is therefore almost completely isolated from the inflation. So TAV actually has lots going for themselves ever since the pandemic. The aviation industry took a nosedive during the pandemic, and TAV was no exception. They were fighting for their lives back then. Their main airport was the Istanbul airport, but it got closed, and TAV was looking for a new crown jewel, and they were in talks with Almaty among other airports. What happened is now they are a 50% owner in the joint venture that got the rights to operate Antalya airport, but more importantly, they have acquired Almaty airport without any concession period. Now, that is not the norm in the industry. A perpetual ownership increased the value of the airport many times over, in my opinion. They have also increased their concession period in Ankara airport as well, and they had major capital expenditures in all 3 of these airports. So you had a company that had its revenue and earnings take a nosedive because of the pandemic, and at the same time the company was investing heavily into their assets. As you can imagine, their financials weren't looking so good. All indicators like net debt to EBITDA ratio were looking at their worst, because not only did EBITDA go down because of the pandemic, but the company was increasing their outstanding debt to fund these growth investments. So this has been the story in the post-pandemic era until today. Other than a new investment in Almaty that will take 3 to 4 years and cost 350 million euros, while also increasing the tariffs and EBITDA permanently, and remember that Almaty is a perpetual asset, the company has now passed the heavy Capex period. The new terminals have opened in new airports, and the growth has started to show itself, especially through their service companies. The company is also expected to start paying dividends in 2026. So, what is happening currently? Here is a snapshot of their most recent earnings. As you can see, the revenue is up 13%, EBITDA is up 12%, but the net profit is down 59%, which is why many investors were shocked in my opinion. The net profit is all one-off non-cash effects. I am not going to get into those details here, but I also want to mention that this is TAV's consolidated table, and TAV has lots of non-consolidated assets, mainly the Antalya airport, but also some other smaller operations like the Medina airport, which they own 26% of, as well as their duty-free company. So it doesn't make a lot of sense to judge the company based on only the consolidated table. Now, they do use equity method to have those assets show up in the consolidated table as well. But in my opinion, it is a lousy way to look at them, given the fact that it doesn't represent the underlying business nor their potentials. So the company structure is quite complex here, which may be a reason why it is still trading at quite low valuations. So, for example, in the first 9 months of the year, the non-consolidated companies almost made 40% of the consolidated EBITDA themselves. But since those companies are not consolidated, they don't show up in the EBITDA line here on the consolidated table. So now I will bring some charts that I have prepared, like the prior ones that you saw. If you want to gain access to my full report on TAV airports, as well as other companies that I follow, like Raysash and Coca-Cola İçecek, you can subscribe to my Patreon. With only 1 month's payment, you gain access to all my work that I have done there. I really think the depth of my analysis is quite deep, and you will find the content valuable. The link is in the description. So, This one is the consolidated revenue over time. As you can see, it starts very low in 2021, mainly due to pandemic. But as time goes on, with the recovery as well as the investments starting to pay off, it has consistently been increasing. And TAV is a profitable company, so the revenue growth is actually benefiting the shareholders. The seasonality is also quite visible here. TAV makes much more profits in third quarters compared to the others. Here is the consolidated EBITDA chart as well. It's basically the same trend. And I want to point out that TAV's major investments have only recently been finished, and they have a new investment plant in Almaty airport. So at least in my opinion, TAV has much more room to grow, so this is not a finished process. The growth will likely continue. So here's Ankara airport for example. The jump that you see in the far right hand is the new concession kicking in alongside the completed capital expenditures in the airport showing up in these results. So here is 3 charts, and just like the other ones I've prepared these. They are duty-free, ground handling and catering service companies that TAV airports own. Now all 3 have recently seen explosive growth, and the reason is mostly them starting operations in the new terminals that TAV has built in recent years, mainly in Antalya airport. But also, all of these companies have huge tailwinds. You don't get to operate in 108 airports worldwide without proving yourself. And despite the lower margins compared to the airport operations, the service companies have been consistently profitable as well. One other point about TAV is their consolidated net table has been stable in the last 4 years despite all the investments that they have made. It also helped that the dividends were not paid during this heavy investment time, and the company is only going to reinstate the dividends next year since the pandemic. But despite the stable net debt, their net debt to EBITDA ratio has been consistently going down and is now at the industry average rates at around 3. I am not a huge fan of reinstating dividends with this amount of debt because TAV is almost paying 40 million euros on average per quarter in net finance costs. So rather than dividends, I would much rather pay this debt down first. However, the main shareholder is Group ADP, which is a bigger French aviation company, and I think they prefer TAV to pay dividends, especially after not paying for so long. The final table here I want to show is TAV's shareholder equity chart, and as you can see, it is consistently going up, which is a sign of a compounder. The current valuation of TAV is around 2 billion euros, and their free cash flow was 182 million euros for the first 9 months of the year. So we can roughly say that the free cash flow multiple at the end of the year will be around 10. But that is not the right way to value TAV in my opinion. Their structure is quite complex, but I can easily say that I think the company is much cheaper than that, and at least there's a 200% upside in the next 2 to 3 years. But the perpetual ownership in Almaty airport is also worth likely multiples of the current market cap. Almaty is growing explosively, and they actually had lots of headwinds with Almaty's structure. But they have fixed most of those with the new agreement that will cost the company over 300 million euros. But since it's a perpetual ownership, I would say the investment is definitely worth it. Before closing, I want to briefly mention their moat. It doesn't really get better than the moat of an airport. Now obviously they have limits to what they can charge per plane and that sort of thing. But when you think about it, if you want to visit Antalya's beaches during the summer, you are going to be flying to the airport and you are not going to be flying to the closest airport for a cheaper price. Almaty also has a huge moat, especially with its location, and Kazakhstan is actually the biggest landlocked country in the world. Also, it is a critical cargo location between China and Europe. So Almaty has a lot going for itself as well. Overall, the company has a lot of qualities that I am looking for in an investment. It has a moat, it is a growth company, the net debt has gotten under control, and there is still lots of room to grow. And just as importantly, the company is valued quite cheaply. You are also not taking the inflation risk in Turkey, as I said. Their agreements are almost entirely in euros. If you want to gain full access to my report on TAV airports, as well as my prior work on TAV and other companies that I follow, please consider subscribing to my Patreon. That was it for today. If you liked the video, please click on the right places, and I'll see you in the next one. Bye.